Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. A retailer and a packaging company top this week's list of growth and income stock picks. Todd Bunton, our growth and income stock strategist here at Zacks.com, joins me now to detail both of these companies that he wants us to know more about. Lowe's Companies is that retailer. Now, the picture that you're describing here is one of some pretty good strength.
Yeah.
Although last year they announced the closing of some stores. But you're telling me that that was not a signal of anything bad, huh?
Well, they've definitely had a challenging environment over the last couple of years with the collapse of the housing market. Consumers are struggling with generating cash and all that. So they closed some underperforming stores, and that's to focus more on core markets. And they actually will be expanding more into Canada, and they want to expand into bigger markets. So you might have noticed on their advertisements they had the new slogan, "Never Stop Improving," and that's kind of what management is doing. It's kind of corny, but it's true. And they actually laid out a very ambitious plan to grow earnings per share to $3.66 by the year 2015. They're about $1.66 now, so that's more than double. And for a company of this size, that's a very ambitious goal. That's about 24% compound annual growth rate on earnings per share, so very strong. Analysts have been raising their estimates after they announced that at an investor conference. But they're not totally buying into the idea that they're going to get to 366. But if you look at the analyst reports, they say, hey, even if they don't quite get there, they could still see strong upside in their stock price. Management expects about 3.5% same-store sales growth over the next few years. So if they're going to get there, they're going to need a healthy consumer, and that's going to obviously tie to the housing market and the economy. And they're going to get there through margin expansion and also buybacks. So they're a very shareholder-friendly company. They've been buying back stock, like I said, and they pay a dividend that yields 2.1%. And if you look on the chart, you can see they've increased that at 27% a year going back to the year 2000. So very shareholder friendly. So you're getting growth, you're getting income, and you're getting it at a reasonable price. They trade about 17 times forward earnings. That's in line with the industry average. So if they even get close to that $3.66 target by the year 2015, you could see a lot of upside in the share price.
Yeah, 27% a year is a pretty good increase.
For a company this size, absolutely.
Yeah. All right, Packaging Corporation of America, PKG, the ticker symbol, is that packaging company. The name kind of says it all as far as what they do.
That's right, yeah. They're the fifth largest producer of containerboard and corrugated products. So you think cardboard, boxes, anything you can package in corrugated or containerboard, that's what they do. They're obviously tied to a healthy economy too. You think shipping or online shopping, that's going to increase revenue. And the company's been doing very well. They actually just delivered a very strong fourth quarter beat on January 23rd. They beat on revenues, they beat on earnings per share. They saw strong volume increases year over year. That prompted analysts to go in and raise the estimates. And when you take a look at the earnings profile, you can see analysts expect strong volume to continue, and that's going to lead to strong earnings per share growth over the next couple of years. Based on consensus estimates, they're looking about 20% earnings per share growth this year, 19% growth next year. So very solid growth story, very solid income story too. They pay a dividend that yields 2.8%. Management did cut that back during the Great Recession, but they increased it by 33% in 2011, or early in 2011. Still below where they were pre-recession, but they're getting there. And if earnings continue to increase, you can expect more dividend increases along the way. And you're getting all that at a very reasonable price. They trade about 14 times forward earnings. That's a discount to the industry multiple of 16 times. So a lot to like here.
All right. Do you own either of these two?
I do not.
All right. In addition to the two companies that Todd just told us about, there are other stock pick ideas that we'd like you to know about, and they are located on our homepage, Zacks.com. So if you're not there already watching this video, you might want to go there and check them out. And check them out frequently because they change every trading day. With Todd Bunton, I'm Terry Ruffalo.